The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. Thanks for starting your trading day off, starting your trading week off as we got Monday off. Hope everyone had a great long weekend. President's Day on Monday, and we kick things off pretty much where we started on Thursday in terms of lower prices in the markets coming at you. Seems like the market's digesting a ton of economic data that we got as this thing chopped around above 4,100. The tide turned pretty quickly on Thursday. You see the volatility. Not sure where that bump came from in terms of the bump that we got higher. Right out of the gate up to a price of about 41.40, folks. 41.40. Yeah, that's a price that's giving the market some heat. And just like that, you're 90 points above where you were Thursday in the afternoon. And you back things up a little further. We got a high of about 41.80. You really take the highs that we got in terms of the end of Wednesday. Thursday, you're talking about highs of 41.66. Now, maybe it was just a little bit of exuberance getting ready for the long weekend. The traders weren't ready to just tank the market just yet, because if you didn't get the run that you got on Friday, you're actually challenging lows. And this was an area that I was looking the first test for it to go to, folks. And why? Because what this area is, so this could be an area. Maybe you get a little bit of a bounce. I think this market's going lower over the next 3 or 6 months, man. We're going to talk about today as we have. Risk-reward-wise, though, man, seems pretty risky. At these price levels even, wasn't surprised to see the market escalating this morning, man. Rates are catching up. The market's catching up. We might have an earnings squeeze going on. We get inflation at 6+%. We have a recession that's looming, et cetera, right? So where are we, though? We're right at basically the 382. Now, this 382 is correlating to the run that we've had this year, okay? So you kick things off at about 3,800. You come into the year at a price point of maybe 3,893, but I've taken the price of about 3,826. I just kind of chose an area of linear regression in my mind that kind of correlates where the highs are, where the lows are, the best fit line. It's an art, not a science, folks. Where you peg that line is up to you, but they're all going to put the 382 pretty close to where you are here. And I do the same thing on the top. I'm not grabbing all the tails. I'm not grabbing all the bodies. I'm grabbing area that I consider kind of the best area that this thing chopped around at towards the highs as it was chopping around near 4,100 to 4,200. Call it 4,175. So what do we get? I mean, we've had quite a sell-off, man. As I just said, you're talking about what? Almost a 3% sell-off in the span of a few days. I mean, you go over the SPY, you see how quickly things can move, man. The SPY. Take a look at the price action that you get. Come on, catch up. What's going on? There we go. You're talking about trading from 414 to 403 in the span of 2 trading days. Now, we have a pre-market session that has the S&Ps down to 1%. But, man, don't think that this can't be a quick one. There's a lot of data. If the market figures out all at once, folks, that all of this data matters, you might see quite the sell-off, okay? So we're going to jump through the markets, and then we're going to give you some of the bear cases out there. We'll give you the disclaimers as well, but we got earnings already. I jumped into the saddle this morning, and I said, man, the earnings, they're out a lot. We don't always get big earnings like this to kick off the week because it's Tuesday. It's not Monday, and you do get earnings prior to the open on Monday, but not usually. Companies like Home Depot and Walmart, both of them trading lower this morning. We'll talk about those as well. We'll see if they trade lower with the market or if that's, both of them are lower on their earnings, but it's a tough day to be putting your numbers out when you have the markets down 1%. NASDAQ 100 off 1.16% right now. The Dow off 1% right now. The Russell off 1.1. Pretty interesting how all the markets, right? S&P's down about 0.9. So all 4 major markets between 0.9 and 1.1% in the red right now. Bitcoin holding up relatively well, man. Can't say enough about Bitcoin at 25,000. Be careful in Bitcoin, folks. Crude sitting at about $77 this morning. We got the gold contract down about $2. Now gold, okay, the pullback, you're bumping into a similar 382 area. Now this one is different. The 382 that I showed you on the market was from the run we've had this year, okay? If you're looking at gold, it's a little bit of a longer term trend. We're taking the trend from where it accelerated from 16.18. Okay, if we back out a bit, you can see that's basically the lows. Trade from 16.18 down to, up to 1966. We're at a really critical area for gold, for some of the currencies, for yields, because they're all kind of tied together. So they're all circulating right around some pretty critical Fibonacci areas. There's your gold contract. We'll see where it trades. We're sitting at 1847 right now. You jump over to notes and bonds. What do we got? We got lower price and higher yield, folks, to the tune of the 10-year, almost 18 ticks, back to a 5-minute chart. Now, we're not quite to the lows of where we were on Friday on that spike low, but we are basically back to where we were at about 8 in the morning. Market's actually lower, right? Correlating to that area. You got above 112. Maybe, as I said before, not sure why. Not sure why the market didn't pay attention toward the close of action Friday. Maybe the big players in the market had just snuck out a little bit early and save their action for futures on Monday and Tuesday. Nonetheless, you got the 10-year back to the lows basically. We got higher yields coming at you. We got the 30-year down almost a full point. Pretty similar action back to where we were early on Friday morning. And let's jump around to some of those currencies. We jump to the dollar index. What do we got? We have strength, okay? It's correlating all around. Now, the dollar, though, right? Interesting to, as you go through this market wrap up, and it always doesn't take this long. Sometimes I go through what's moving, and it seems like I do it in 30 seconds because there's not a ton of action. Pretty interesting what's going on. We've already been on the air for 3 or 4 minutes, and we're still digesting some of the moves. Now compare where the dollar is to where the market is. So there are some differences here. We're going to see how it plays out on the open, as in, yields, you were back to where you were at the beginning of Friday. Dollar, not so much yet. A little bit of a different story. Still sitting above 104, still 21 ticks above where we were on Friday, but a little bit of a different action in terms of that's Monday's action, right? You got to back it up to Friday in terms of where the market was. So the dollar's pulled back actually substantially from where it was on the market open on Friday. That's your dollar. And then, as I talked about, putting this thing back on a daily, right? Let's go back even the weekly to see some of these Fibonacci areas. Dollar index, pretty remarkable. You give up the 618 in the entire move. That's where you've bounced from. Now, again, the tail gets you all the way down to about 101 almost. The 618 comes in at about 102. Okay, but just like that, we're back at 104 on the dollar index. We'll see where that goes. We'll jump over the VIX, getting a real spike here in the VIX for the first time. Now, we're going to back things up just for about a year. Last year, this was about the price level that you really struggled to get under for the volatility index. This year, it seemed like things might be different, but maybe they're not different, right? We're still raging inflation. The only thing we have going on top of it now, not only are we facing raging inflation, with a Fed that's on a hiking cycle that I've never seen in my lifetime. But now we're starting to really see the impacts potentially on the economy, right? So that, almost a double banger in terms of the impact you could have if you still are. It's not supposed to be that inflation is raging as the economy is still forward getting decimated, right? And that's what we may see. It's like the pain may start to come in the economy. Some of these lags are going to start hitting right now. And we're still not seeing inflation taming. That is a worrisome combination between the two of them. All right. And as we come into it, we'll tease this. We're going to talk to our man Kevin Hincks coming after the break. Morgan Stanley, how about a 26% drop they're talking about? Things could move quickly, man. Now, I've talked about, I believe this is Wilson, right? Their analyst over there, Wilson. Where? Michael Wilson, their team led by Michael Wilson. He's been pretty spot on, man. He called the run up early in the year. Now he's talking about maybe 26%. You got Goldman out there today. Shouldn't be too surprising. They're looking for 25 basis points the next 3 meetings, and they say no cuts until 2024. Folks, that's like the bull case, I think. 3 25 basis point hikes and then done. And of course, they're not cutting this year. We got a lot to talk about. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down about 0.9% right now. You get the NASDAQ 100 in the red by 1.1% right now. Even the Dow off about 0.9%. Let's jump over to our man, Kevin Hincks. Every trading day, folks, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White. They have an outstanding team at the network, folks. They bring on some great guests. They walk you through hypothetical trade setups to learn about the markets, especially if you ever want to learn about options, folks. They walk you through 3 hypothetical trade setups, usually every program. Check it out. I've learned so much from the program myself. Kevin Hincks, it's been quite a market since I spoke to you last Thursday morning. Good morning, man.
Good morning, Tommy O'Brien. Yeah, this, if you look, since the non-farm payroll data came out at the beginning of the month, when the 10-year yield was at 3.38, and the dollar was at about 101.5. And you look at where they are now, that, along with some Fed talkers that are pretty harsh on inflation, and you've got a market that topped out and is working its way lower just in the opposite direction of yields and the U.S. dollar, Tommy. As earnings come out, we're starting to get to the second half of earnings season now. Retail will start coming in, as you know, and this is going to get a little bit interesting. We're definitely soft to start the day. It feels like a Monday, Tommy, but it's a Tuesday. And Home Depot and Walmart, the 2 Dow stocks for this week, are already out with earnings, and both are lower.
Yeah, I was reading the news, and it does feel like a Monday. I actually just texted somebody, Kevin, during the last break. They had texted me, and it feels like a Monday, man. Of course it does. I hope everyone had a great long weekend. It's nice. We should have 3-day weekends all the time. But Walmart and Home Depot, I'm not usually used to kicking off my trading week with such big companies out with their numbers. Yeah, it's Tuesday. It's not Monday, right? So markets, Kevin, when we talked to you, I think they were trading above 4,100. They made it up to like 4,140. We're solid 90 points below where we were at on Thursday. We got a big number for the PCE this week, For those traders out there maybe looking at, in my mind, I'm trying to digest because you talked about the non-farm payrolls, and we've just gotten a series of pretty important numbers, and all of them have hinted to a very strong economy, retail sales, right? CPI, then we got the PPI, of course. Where do you think this market, Kevin, looking risk reward wise, still above 4,000? I see the ability, and this is what I'm looking at, for maybe the market. What if it's trying to reprice all of these events as mattering all at once right now, as kind of what's, the whole Fed speak with 50 basis points? Do you see some risk? I mean, I was reading, I'll give you the basis of my question as I just keep going here. Morgan Stanley talking about like 26% potentially. This thing could pull back within months if rings really accelerate. What do you think of those types of headlines out there, Kevin?
The problem that this economy has right now is reigniting or potentially reigniting inflation. And how is that happening? Well, it's spending, right? It's 1.1 trillion in August. It's another 1.7 trillion in December. And people think, why is this happening? Well, look no further. You've got Jerome Powell raising rates at the same time the government is racing to spend more money. And so this is going to get a little interesting because the numbers are going to be stingy and frustratingly elevated as they come down. So you can make a case that, all the year-over-year numbers came down in CPI and PPI, but they stopped coming down at a higher pace, Tommy, and that's going to affect rates when you have so many Fed speakers coming out last week. And I marked the one day that James Bullard was speaking in the afternoon, and I said on the TD Ameritrade Network, be careful here, because James Bullard, the ultimate hawk, is coming out with, and speaking early this afternoon. Sure enough, he came out extremely hawkish. So the Fed speakers, and there's more this week, they're going to stay on point with what they're saying, Tommy. And, the dollar's a little higher this morning. 10-year yield's a little higher this morning. Crude oil's a little higher this morning. That's all working against this market, Tommy. And then you've got some earnings. Now, Walmart had a nice earnings, but they guided extremely conservatively. Home Depot, it's a different story. Higher ticket prices make the numbers look better, but lower volume across the board for Home Depot. So interesting the way this is starting to play out here this week, Tommy.
Yeah, both of those stocks, man. I was reading about Walmart as well, and it seems like maybe they're trying to lower those expectations going forward, take a little bit of a hit now, because they were talking about even in the last couple of years, they had forecast not the kind of growth that they were able to, of course, deliver last 2 years, though. Maybe not years like we're going to see in the future, especially during that pandemic, of course. I was reading, Kevin, also. So Morgan Stanley was the one talking about maybe 26%, their analyst team. Goldman out here, I got a headline talking about, now they're looking at, Kevin, 25 basis points for the next 3 meetings and no cuts this year. And I read that and I said, well, isn't that almost like the best case scenario right now? What do you think of, and this is like the $1 million question, but I read a headline like that, Kevin, and I say, come on, man, of course that's like that would be a decent case right now, because if we can go 3 and stop, when you have Fed governors, right, like you just said, saying that we should do 50 right now, and then there's the case that Goldman's going through, I believe that's like almost a bullish case. Where do you see 50? Do you see 25? What do you say to people out there trying to figure out that question, of course?
Well, I think if you go anywhere past the next meeting, I think you're guessing, because there's data that's going to come out between now and the next meeting, Tommy. And I think Jerome Powell may take remember, the most dovish person right now, it appears, in all of the Fed is Jerome Powell. His rhetoric has been the least hawkish, and that's why the market rallied the last time he spoke. Now, that doesn't mean he's going to change and keep doing it, because the economic data that has come out since then has been pretty strong, stronger than he'd like it to be, almost in the hot category. So, yeah, he's got I think you could definitely see Jerome Powell. I mean, 50 basis points has come back into the rhetoric. That in itself is a problem for stocks. Doesn't mean he'll do 50 basis points, but he'll do 25, and then he'll say, wait for more data, and then he'll keep making decisions. But even Jerome Powell said, any dot plot or any future expectations, they're worthless, because it's the data that's coming out that'll cause the Fed to move either strongly or less strong, Tommy. So when I look at the Fed, going past the next meeting is a waste of energy. I think you trade where the market is right now and what the Fed members and Jerome Powell are saying right now, Tommy.
It's a great answer, man. Keeps us grounded. And I ask you, and I know it's almost an impossible question because who knows, like you say, where we're going to be. But there's just so many headlines right now coming at all of us, right? And the market's reacting so much. But you're right. I mean, you look at where we're going to be for even the May meeting, which is 2 meetings out. And the question I just asked you was talking about 25 going 3 meetings out. And even the May meeting, what are we going to get? March and April that we haven't seen yet. And we're still getting data this week for the PCE, of course. So lots of data. With that in mind, Kevin, you mentioned we have a couple companies out with their numbers. We still got earnings coming. What are you guys talking about on Fast Market at 12 today?
I don't know the lineup, but I know what we're trading today, and that is Coinbase, Palo Alto Networks, and TJX. So we'll get into a little bit of retail, a little bit of crypto, and a little bit of cybersecurity today, Tommy. I'm not sure of the lineup yet. We're waiting for Folio to bring their data, but those are the 3 names we're looking at.
Coinbase is an interesting one, man. I'm always watching, but I'll be seeing headlines for them almost double what they were at this year, man. But be careful of Coinbase, folks. Kevin, thanks for the time, man. I appreciate it. We'll be watching at 12. We'll talk to you tomorrow, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, tune in at 12 o'clock. We'll be right back for the open.
Market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets markets open, and pretty much where we have been kicking things off for most of the program. S&P is down just under 1% right now. You get the NASDAQ 100 down just more than 1%, off 1.2%, the Dow off 0.9%, and the Russell off by 1.1%. We jump to crude, 77.09 right now. We jump to the gold contract. Let's see what's happening with gold. Oh, flat, that's all. 1850 right now, and let's jump to notes and bonds, man. As we got lower price and higher yield right now, you're talking about a 10-year down 20 ticks, almost right near the spike low of Friday. Excuse me. We're approaching 3.91%, folks. 3.91. Interesting. As we climb towards 4. Seems like 4 might be back in play, man, to say the least. Now, this week, we get, I'm making sure, but I believe so, we get Fed minutes tomorrow, right? Minutes from the January 31st and February 1st meeting, expected Wednesday, and then we get the PCE on Friday. Those would be the two biggest economic data points. We have earnings this week as well. Let's see how Walmart and Home Depot are opening on their numbers. Walmart down about 2%. Looks like they liked the conference call, whatever was going on, as that thing was down at about 140. You're up at 143.49. We jumped to Home Depot shares. Home Depot down about 3.8% right now. And as I was jumping around to these two, so Home Depot, I've referenced it with Kevin. Let me see if I can get, and this was the phrase that I was referencing when I was talking to Kevin, talking about expectations and how Walmart, this is Home Depot. I confused them. Home Depot, they guided for flat sales growth in each of the last 2 years, but churned out sales growth. Okay, so interesting. Last year, sales rose 4.1%, but they had guided for flat sales growth in each of the last 2 years. So we'll see where they go. They like guiding flat. Something tells me this year is going to be a little bit tougher than the last 2 years for a company like Home Depot, though, with where rates are, where home prices are facing some heat, to say the least. They expect adjusted per share earnings, this is Home Depot we're talking about, to decline at mid-single digit rate for this year. Margins impacted in part by an additional $1 billion that it's going to invest into wage increases. What have we been talking about is, and we, everybody, right? Wages, they're sticky. If we have wages, the chairman talks about it, Powell. If wages are staying hot, man, that is going to be a driving influence on inflationary pressures to the upside. The outlook for roughly flat sales growth comes after Lowe's and Home Depot, had benefited pretty dramatically. So that's your Home Depot action. We jump over to Walmart. Profit outlook signals another rocky year. Second straight annual drop in earnings. Earnings will decline by as much as 6.2%. to an area of 590 to 605. And Walmart had been looking for a gain of 3.8% to 653. That's a big miss for the biggest retailer out there, second to Amazon potentially. Comp sales, excluding fuel, will gain 2 to 2.5% during the current fiscal year. That trails the 3.1% number. And comp sales, I mean, think about inflation raging, right? The comp sales, I'm pretty sure they're not inflation adjusted. So, 2 to 2.5% when everything's going up more than 2 to 2.5% over the last year, and that's Walmart numbers. So both of those companies open a little bit lower. All right, jumping back to the two articles I was talking about at the beginning of the program. First, you have Morgan Stanley's Wilson. The risk reward for equities is now very poor, especially as the Fed is far from ending its monetary tightening. Rates remain higher across the curve, and earnings expectations are still to 10 to 20% too high. Okay, now that's an interesting one because, let's see, we got a lot of good articles out here. Yeah, is this talking about? I believe it is the margins. Yeah, here it is. So you tie all these together, right? And it doesn't mean it's going to happen, man. But the risk when the market's at 41.40, let alone right now, we get the market trading at 40.52. Okay. Stocks rally despite squeeze on profitability. Now we're jumping around here, right? You got Morgan Stanley's Wilson. He's talking about potentially a 20-25% pullback in the first half. Now, keeping in mind, folks, that 20% is 800 points in the S&P. 25 basically gets you to 3,000. Okay. You could argue, though, that the acceleration we've seen, jumping back to the S&P, from the 3,600 area was unreasonable. So there, right away, you take 10% off. So all that would be about 15% below where the market bottomed out at in October. And boy, I'd say where we are right now versus the expectations, the market expectations for where rates would be back then, it wouldn't be outlandish to get a repricing of things, especially if you face some earnings heat. Okay, so that's what they're talking about here in Wilson. And then you jump to, the fact that margins may be facing some heat. So you have net profit margins for the S&P 500 companies that are poised to drop for the 6th quarter in a row. Year and a half you're talking about, okay? The net profit margin for companies in the S&P 500 has fallen to 11.3%. That's based on actual results and analyst estimates for companies that have yet to report. That would mark the 6th consecutive quarterly decline from 13% in 2021. Now, here's what I'll say. This article was written before Walmart and Home Depot. You keep getting those earnings revisions, right? What happens to the margins? Rising costs for key inputs. What is Walmart doing? A key input. Human capital. $1 billion they're putting aside. Was that Home Depot or Walmart? One of the two. S&P 500 net profit margins, you see the collapse in the beginning of the pandemic. 2nd quarter of 2020, still coming in at 8.5%. You spiked to a high of 13%, and since then, it's been a slow decline, and you just went from 11.9 to 11.3. It's actually accelerating to the downside there. Okay? That may be some of the lag that is hitting here, and don't think you can't get back. I mean, we're just sitting right where we were practically at the beginning of 2019. Things are pretty good in 2019, man. We got a lot of heat, along with rates that these companies have not faced in practically forever, for all intents and purposes. Yeah, and they go through some of the companies here, okay? Kraft, they hiked 15% last year. 15%. Now, they said last week it's not planning further price increases, okay? But these things are all still going to matter in terms of the impact that they're having as the lag is somewhat kicking in. And they go over some of the data that we've talked about. Yeah, this is analyst estimates for this year's S&P 500 earnings per share. By the time you're looking at $222.29. That's what analysts are penciling in per share earnings this year from the S&P 500s. That's down from $250 last May. I mean, the trend is not your friend there, okay? So you just want to be aware of the scenarios that will play out, the probabilities that those scenarios will come to fruition. And when you see all these earnings numbers, right, you see profit margins sinking, you see Walmart and Home Depot, two of the biggest retailers out there, their numbers speaking to that same exact thing. Why is that happening? Cost, human capital, wages, the numbers that are persisting, the Chairman Powell, I mean, that line, those companies spending money, hurting wages, crushing profits, right? Chairman Powell, I mean, yeah, that's potentially going to help pull things back. But you know what? It's not going to help when they're giving those raises, because that's going to be wages. That's going to be pressure on inflation. So PCE is going to be a big one on Friday. Fed minutes from the meeting about 3 weeks ago is going to be a big one on Wednesday. We'll go over what else we have. Markets just hanging out, down about 1% across the board right now. We'll check out some of the equities. We'll be right back, folks. Stay tuned. Give us a call, 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets lifting a bit from the open. S&P still down about 33 points. I got a chart of Carter's up here. If you have small children in the house or anywhere in your family or your friends, you're probably aware of Carter's. I, of course, am aware. They have their numbers. Just going through some of the companies with the numbers. Carter's, their numbers out on Friday. You're looking at about a $5 move for a $75 stock. You take a look at the chart. We'll go long-term, 5-year weekly. Down towards the lower end. I mean, we were down at $63, quite a run up in the beginning of the year, but you look where we've been the last 5 years. Let's back this up even further. Yeah, quite a run from 2009 up to 129, and you're at $75. But you look where this thing has been basically any part of since 2014, right? You dip below it during the pandemic. And boy, you go down and test those pandemic lows as well. Carter's sitting at 75.75. Now, I want to jump to it because even if you're not familiar with it, folks, you're familiar with it. The maker of apparel exclusively for babies and young children, they got a Carter store near me. They have 970 company-operated stores in the U.S., Canada, and Mexico. I don't own any of this, folks. It's just interesting looking at this because as a parent, I go in that store, man, and I got to like tie my hands together to make sure I don't buy everything, right? Because they get the toys, they get the cute outfits, especially when they're like newborns, 3 months, 6 months, 9 months, 12 months. You got to buy them new outfits every 2 to 3 months. They grow so quick, every few weeks in the beginning practically. But what is interesting, okay, what do they own? So they have Carter's, which is the namesake. And then they have Oshkosh B'gosh. Everybody knows Oshkosh B'gosh. Child of Mine, Just One You, Simple Joys, and Little Planet. Now, what's interesting in just reading through the company profile in the Thinkorswim platform, okay, it's interesting how they segment which brand is where. The company's Child of Mine brand is available at Walmart. It's Just One brand is available at Target. Its Simple Joys brand is available at Amazon. I'm sure you could add exclusively, all of those brands exclusively available at each one, right? They have a different brand for every company, so that company gets to say that they are exclusively providing that brand. Probably so you can't just immediately price shop the next one, right? The company also owns Skip Hop, a global lifestyle brand for families and young children, baby apparel, sleepwear, gift bundles, and under Little Planet brand. So anyway, going through some of the numbers, I took a look at that chart, and they're a $3 billion company right now, just under that number at that price tag. $2.895 billion for Carter's. But you're talking about almost 1,000 stores, folks. And guess what? Oshkosh ain't going away. And if you have kids in the house, Carter's ain't going away either, man. Remarkable. All right, markets right now back to where we kind of opened right now. And let's jump around to what else we have going on. Yeah, we could talk about treasuries. Looking at this article earlier, it was talking about investors stung by treasuries rout, brace for next blow from the Fed. And they're talking about, baby, long-term treasury yields may be headed higher if and that's talking about basically where we're comfortable with rates sitting in terms of the economy's resilience and a neutral higher rate. Yeah, what if that happens, right? What if where we need to be neutral in terms of the Fed's decision, okay? They think neutral right now is 2.5, the same as before the pandemic began, and they would probably be expected to return there once inflation is beaten. Any revision of that view would threaten to push yields on longer-term Treasury sector securities to fresh new highs. It's so interesting. And you could call that a tail risk, but as numbers persist, man, it is a much higher risk in terms of, does the Fed think that if they are above 2.5, that it is very restrictive in this economy right now? It might be so hot, folks. If retail sales are growing at 3%, right? If sales are growing at 3%, et cetera, we're adding 500,000 jobs a month. Maybe the neutral rate's a little higher. It's possible, okay? And boy, if you see that, and that kind of ties into whether the Fed will target 2%, right? All the conversations of whether they'll shift and they'll shoot for a 2.5 or a 3. I don't think that's going to happen, man. Powell doesn't want to go down in the history books as the guy that said, you know what, we're going to accept higher inflation for longer. That's what you would be doing, right? That's going to take a lot of pain in the economy for him to come to terms with that. Hopefully we don't see that, just because that will be quite a pullback. But all of those are in the mix, okay? So keep your eye on those in a big way. All right, what do we got? We talked about all Walmart, Home Depot, layoffs. Yeah, let's just talk about some of the companies coming out with their numbers. So, and there was an article on Coinbase. I wonder if I have it up. So Coinbase is out with their numbers after the bell, I believe, today. They're positive right now, up 0.3% on a negative market day. Let me see if I do have an article up by them. I was reading it this morning. Oh, maybe it was on the Journal. Okay, I'll find it after this break. It was on Bloomberg. No, we have a lot to talk about. I mean, talk about geopolitical risk. We're not even going to get into it, but pretty remarkable we don't even get into Putin halting a nuclear pact with the U.S. as it vows to push war in Ukraine, right? These are the types of risks that are really the tail risks. And meanwhile, we're talking about a higher neutral rate, a new inflationary goal for the Fed, right? Those are realistic risks that are in the mix. The real tail risk is nuclear proliferation with Putin not making deals anymore because of an escalation of a war he has with Ukraine going on. Okay, I guess I don't have it up. I will pull it up, though. Coinbase, they were just talking about potentially that regulators are coming down, man. They're going to face heat in terms of how they can procure new accounts, how they can grow that business, how they can monetize the type of crypto exchanges they're doing as regulators really start to clamp it down. You're at $65. I just think there's better things in this market, folks. I mean, I'd even say there's better things than Bitcoin, because you want to stay away from this company on a longer term. You're trading it intraday. You're trading it with capital that can be risk capital. That's great. But you're talking about a company, man. You go back on a 3-year weekly, right? They pushed this thing out when Bitcoin was at 65,000, folks. Okay, you're not hearing all the stories of everybody trading crypto because one of the biggest exchanges out there turned out to be a Ponzi scheme. That's going to be a hamper on the industry for a very long time. And even if Bitcoin, which it looks to, it seems like the cream of the crop is rise, just like in a market, right? What happens in an extreme pullback in the market? A huge liquidity crisis in the market. What happens? Everything trades lower, but the strongest companies out there perform the best. Well, in the crypto sector, what's happened? There was a massive liquidity crisis because one of the biggest exchanges looked to be a Ponzi scheme. But what happened? The cream rise to the crop. Cream rise to the top. We have Bitcoin at 25,000. You have Ethereum at 1,700, right? There's your drop off, man. You're above that price level. Bitcoin and Ethereum. So I would rather be almost in Bitcoin and Ethereum versus Coinbase. Is that the drop off, I think? So you're almost back to that level. In terms of if you were in Coinbase, you didn't get back the whole collapse that you had. Versus Bitcoin and Ethereum, you had And there's a possibility you wake up one morning and you have funds in Coinbase and they go BK, and somehow those funds, you're just a general creditor that never gets them back. So I wouldn't put my money anywhere near that company. And watch out for this market, folks. We're coming right into that 382 area. It's going to be interesting to see how we trade. We're at 4,044 right now. That's also the area at a little bit of a base back here at the end of January. But boy, we're only at the 382, and that's just of the run we've had this year as markets continuing to drop. S&P's off 45 right now. You get the Dow off 399. Stay tuned, folks. One more segment. Let's see if I can find that Coinbase article. They got their numbers after the bell tonight. We'll talk about some other companies. Cheesecake Factory, Papa John's, Warner Brothers Discovery out this week. Stay tuned. We'll be right back, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got a chart of BuzzFeed up here. Yeah, so they have that acceleration when they're going to be using AI to write articles. I'm bringing this up because you're up 2.8% today. You had the acceleration on Wednesday as well. But boy, pretty remarkable. So the first acceleration took place on January 26th. Okay, you see the run up pre-market. You see the acceleration pile on at about noon Eastern time. You run from about $1.20 up to $4.25. Point being, man, you could have gotten into this thing pre-market on January 26th at a price point of $159, and what happened? You still would have been in a losing position a week ago last Friday. Yeah, be careful in this equity. Yes, ChatGPT, AI-generated content, changing the game forever. But boy, be careful of that equity. When you can trade to 425 and back to $1.50 like a heartbeat, you're back to $2 today. You want some fast moves. Yeah, you can get some fast moves in there, but be careful on that one. Okay. And yeah, this was an interesting article in Bloomberg talking about just even Yelp, the exodus that's taken place. A couple weeks ago, I'd take a look at, they had the numbers from New York City to Florida. Over the last, what was it, about 12 years or something? I think it was 2009. New York City and, New York and Florida used to be similar. And now you have Florida actually rising by 3 million people over the course of 12 or 13 years. We got the wind at our backs, man. After Yelp shuttered its offices, fully remote employees left major cities for Florida and Texas. It found a share of the workers living near its office locations plunged, of course, during the pandemic, down 70%. Followed by New York, Washington, D.C., and Chicago. That was their headquarters in San Fran. All of those down dramatically, right? The people living in Florida jumped by 4 times that number. Pretty remarkable how things can change so quickly, man. Time, it moves so quickly, and a year or two is literally nothing in the grand scheme of time. You look at how things have changed in 10 or 20 years, man. It's amazing to think my son's 2 years old, where life will be in 10, 20, 40 years when he's my age. Amazing. Folks, thanks for starting your day off with me. Markets, basically at session lows. We got our man Basil Chapman. He's coming up next. Steve Rhodes at 11. Fast Market at 12. Larry Pesavento, Dave White, my dad back at 3 o'clock. Have a great one, folks.